Hello and welcome. My name's Cann with Mining Journal, and with me I have Hayden Locke, Chief Executive and President of Copper Development Group, Marimaca. And today we're going to talk principally about the copper price and when it's going to move or if it's going to move. Welcome, Hayden.
Thanks, Chris.
We've been talking about copper for a long time with the energy transition as the main context, and people have been looking for a movement of significance for probably a few years now. This year's been a difficult start. It's been drifting a bit. What's your read on where it might go for this year, and if investors can expect some sort of uplift in the next 12 to 18 months?
Yeah, you're absolutely right. I think Clive Newell, who many people will know as a founder of First Quantum, often jokes about this supply deficit that's coming, and that he'd been seeing the same slide from bankers and research analysts for 10 years. And it's been moved further and further out. So I think it's a bit of a running joke that there was, that it's been talked about for a long period of time and hasn't potentially come to fruition. I think I still am very much a believer of that story in the medium to long term, and it's fundamentally driven by supply. Supply has been significantly underinvested. There's been very few new discoveries being made. And eventually, with underinvestment and lack of new discoveries, it will come to bite. I think the energy transition is very much underway. We know that. I jokingly say the train has left the station. And yes, this last 12 months has been probably not quite what people were hoping for, but I think that's largely driven by the global macroeconomic climate. Copper in its most fundamental level is still driven by what is happening in the global economy. And obviously we've had inflation in virtually every major economy in the world and a corresponding tightening of interest rates in each of those economies, which has dampened global growth and global demand. So I think actually from my perspective, I'm really excited and potentially a little bit scared that copper hasn't traded off more than I would have expected it to, given the economic malaise that has occurred globally over the last 12 to 18 months. The fact that it's still $3.75, $3.80 a pound is, in my mind, quite remarkable. And as we come into what I think will be a period where inflation is tailing off and Feds start to cut their interest rates rather than raising their interest rates, I am quite concerned that there could be a significant and sharp move upwards in copper price, which could catch everyone by surprise.
Sure, and you say concerned, but obviously excited would probably be the other term you might use. But I think a lot of the language out there is around this excitement. I think Robert Friedland recently quoted, among saying other things, it's a tinderbox. It's inevitable that we are going to see this huge run in the copper price. But as you say, this has been happening for a long time. This has been talk around this for a long time. Jeffrey's note that came out recently was linking or showing the historic relationship between supply and the price and demand. And it is essentially, it's a demand-driven commodity, as most commodities apparently are. So on that demand side, and we're talking about this malaise in global economics, when are we likely to see something, and what will be the triggers that will actually see some of this rhetoric around the energy transition and the bite in supply deficits actually materialise into a run in the copper price?
Well, we're already seeing it to a certain extent. And I think there's been a lot made about China, which is the bellwether for demand of most commodities, about how it's performing and the negativity around what's going on in China. And I think there's very much the publicised property market woes in China. But what we're seeing is a broadening of the demand base in China. And it's very clearly driven by their massive, massive investment in renewable generation and their energy infrastructure and the take-up of electric vehicles and all of those sorts of things in China. Last quarter of last year, Q4 2023, was a record year of copper concentrate imports to China. Well, why is nobody talking about that in a country that is supposedly really struggling from an economic perspective, and yet it's still importing record amounts of the product that we're going to be selling, is quite remarkable. And so we're really, as you say, excited. I hope that it's a sustainable run up in price, because I think that's healthier for the industry in the long term. But equally, in the short term for our investors, a sudden price spike will be a very exciting time and an opportunity to make money.
Okay. In terms of actual fundamental drivers, we've talked very generally about it being a bellwether for economics or on the global economy. What about infrastructure versus private consumption versus other driving factors? Where are you looking, or where should investors be looking in terms of seeing some real demand bite for the copper price?
Yeah, it's a great question, because I think when I think about commodities, it's obviously cyclical. We all know that, and there's cyclicality, and we're all looking for the next great cycle of, multi-commodity cycle where we can invest across the board and make some money. And I think we are on the precipice of something, but this one is slightly different to the ones that I've looked at in history. If we go back into the early 2000s, late 1990s, early 2000s, with China and the Great Transformation, as I call it, moving from a more agrarian society to one that is urbanised, we saw a significant amount of demand growth as the Chinese population moved into the city centres, and that was driven by infrastructure investment. And I think infrastructure has a big role to play in what is coming for the future. And what I would say about what I see as the infrastructure-led demand cycle coming is it's not driven by a single entity. And I have some really interesting slides which I'll put up on the screen, but there's one in particular that shows that this is a global phenomenon. China is again leading the way, and I think one of the slides that we'll show is last year their investment and amount of generation capacity in solar grew 146%. I mean, that is an absolutely mind-blowing increase in the amount of solar generation for a single company to do. I think in the last year they spent something like $500 billion on renewable generation capacity in China alone. The numbers are absolutely astronomical. And so, but it's not just China investing. So it's no longer driven by a single entity. This is a global phenomenon, and all of the policies around the world are starting to fall in line behind this same energy transition, where governments are realising that they have to spend money on their infrastructure in order to support this energy revolution that's ongoing and is now very much in train and I think unstoppable.
So if the train's left the station, if China is making these huge investments and the copper price hasn't taken off yet, does that mean that other economies are stepping back from their commitments? We talk about maybe the UK you've mentioned. The UK has deferred its diesel to EV transition by 5 years. I think China itself has kind of pushed some of its targets back a bit. Is the world actually pushing back from its commitments to the energy transition, and is that going to stall any uplift in copper?
I think absolutely. I think they're stepping back from the aggressive nature of the commitments that were made, and my home country Australia is a case in point where I think classic human nature to overestimate our ability to make a sudden change of something that is so intrinsically related to our society comes with a huge amount of unintended consequences, which are very problematic for society. So I think everybody's realised that this transition is going to take longer, but I don't think anybody is pulling back from the view that we need to make this change, whether that's right or wrong, whether you agree with that. The government policy is, everybody in general agrees the changes need to be made. We just believe it'll take longer. Regardless of what happens, the investment needs to be made, and actually that may extend this cycle that I'm going to be talking to you about today.
So extend the cycle, but potentially delay the onset of the start of this run in pricing. And I guess I'm thinking with my cynical investor hat on.
No, I don't think so, because I think the reason we haven't seen, look, if you were talking to me 4 years ago about the copper price today, we would have been over the moon with this, but now everybody's quite disappointed with a $3.80 a pound copper price, which I find pretty amusing. But I think what's held back the copper price in the short term has been this global economic malaise, as I describe it. And I think we are coming to the end of that. I think if you look at the metrics coming out of the US in particular, which is a big driver of global, I guess, health, they're generally accepted. I think the probabilities are that the US will start cutting rates middle of the year, and most people are expecting 3 to 4 rate cuts between the middle of the year and the end of the year. That will be significantly positive for the commodities suite in general. And so there's two different aspects to it. There's the short term, which is, okay, well, what's going to happen in the short term price spikes? Well, I'm almost certain we're going to see higher copper prices. And I'm certain that we're going to see higher copper prices in the next 12, 18 months, 2 years. The question is, how long will those higher copper prices be sustained? And my belief is it's going to be a 5 to 10 year cycle.
Okay. You talked about the price being great if we look at it over a 5-year horizon, potentially retrospectively. Also in that period, what we've seen is a huge amount of inflation, which has hurt capex and operating costs. What for you now looks like a healthy price for bringing new supply or to incentivise new supply?
Yeah, and this is another thing that we that we talk about, and we've seen it more recently in lithium, where there is an incentive price to bring new production on, and then there is an incentive price to keep production operating. And those are two different things. And in my view, the incentive price to keep operating is lower than the incentive price to bring new production on. And so I think the incentive price to bring new production on is markedly higher than where we are today. And I mean, I'm talking north of $5 a pound copper. And the reason I say that is the pipeline of new projects in the copper space in particular is dominated by mega projects, which have an enormous amount of risk. And there are several recent examples. For instance, Teck has a QB2 project, which was initially thought to be a $4 billion project, was delivered for nearly $9 billion. There are risks of delays as caused by geopolitical issues. The hurdle rate for miners now to make a decision to greenlight spending several $billion of capital are significantly higher, I think, and rightly so. Investors are demanding that. But as a result, we need a significant move in the copper price in order for boards to say, okay, we're going to go and make the decision to invest in these long-term assets and not get hung out to dry by our shareholders.
Staying on the supply side just for a second, and there are other things on the demand side I'd like to cover, but we saw a lot of the large copper producers and diversifieds with heavy copper interests reporting recently on full-year production. A lot of these groups are saying we're actually up on our copper production by 2 or 3%. That kind of jars with this commentary around supply side constraints. What's been your view on the potential to maintain production from existing large-scale producers, but then also for them to be able to ramp up to meet demand?
So those are the most recent updates from the major mining companies. But if you go back a quarter prior, they all had enormous cuts, or a vast majority of them had enormous cuts to their copper outlook. So actually this step up of 3% is from the reduced basis that they initially reported. We have a slide here which shows the estimate from a group out of New York on the amount of investment required for this, let's call it the top 20 mines in the world, just to maintain production. There is a serious issue with maintaining production, and so I think the number is something like $50 billion is estimated to be the capital required just to maintain production from the top 20 mines, which account for about 36% of global copper. Why is that? Well, grades are declining, things are getting deeper, you've got to invest in bigger fleet, so from my perspective, I think supply is actually significantly riskier than many people have given, I think, credence to. And that's been evidenced recently. Okay, end of last year, Anglo American cut. More recently, Codelco in Chile, the largest producer of copper in the world, announced that this last year was the lowest level of copper production in 20 years out of Chile. The largest producer of copper in the world. I mean, that is a remarkable statistic from a country which has a government stated goal to continue to grow its share of copper production, and it has several of the largest mines in the world. For it to not be able to achieve even maintaining its production is quite startling. And then there are geopolitical issues and risks that are unaccounted for in people's supply-demand models, like what has unfortunately happened in Panama with First Quantum taking out 400,000 tonnes of production almost overnight. So I think actually the risk of supply shock against a solid demand backdrop is by far the greatest risk on to the upside for the copper price over the next 5 to 10 years.
Okay, and just to jump back to demand on that point of a consistent demand scenario, that feels like a risk in itself, though. Surely the idea of a recession, given the volatility that you've touched on already, but some of the potential for a greater economic shock born out of the US or China, surely that is a serious risk on the downside for copper.
Absolutely, it's always a risk. But I think there are two aspects of that I've been considering recently. And one is the broadening of the demand base. And what we saw, if we go back even further in history, the Great Depression, FDR, one of my favourite pieces of history of how his policies brought the US arguably out of a phase of recession through his government-led infrastructure investment. And I think that set a model for future governments to help their economies to navigate what we like to call a soft landing. And we're seeing that. So I think there is a policy response that's already occurring. And so I think the longer term picture for copper demand is pretty solid, certainly for the next 5 to 10 years. After the next 5 to 10 years, we go back to the original sources of Dr. Copper being the most important drivers of global demand. Hence why I say, like all things in commodities, it's cyclical. The next 5 to 10 years is going to be an amazing period to be looking at copper, and we're very excited about being one of the projects that will hopefully be in production during that period.
Surely if the energy transition is successful in 10 years, 15 years time, certainly by 2050, we're looking at a completely different scenario for copper and Dr. Copper in terms of the actual requirement. Is it actually realistic? One of the things that I always find interesting is consumption versus demand, and obviously consumption is constrained by supply. If we need these ridiculous numbers that we hear about, is there a potential that people will just move away from copper?
It's not substitutable. Yeah, I'm sure there will be. Human ingenuity is nothing if not amazing. And so there's been a lot of talk about graphene as an example of being something that's stronger than steel and more conductive than copper. Aluminium is a potential substitute. The problem with aluminium is it's incredibly energy intensive. And so as a result, if you're thinking about your carbon intensity, using aluminium to replace copper is not feasible. There is always a chance that occurs. Is that something that I believe will occur during our lifetime? Probably not. But over the course of human history, yeah, absolutely. I'm sure there is a chance that copper will be diminished in its responsibilities for delivering what we're talking about. What I'm talking about is the next 5 to 10 years and an opportunity to really position ourselves well for something that I think has to happen in order to achieve this. Now, to be clear, there is no shortage of copper projects. There are numerous projects that could be brought online. One of the favourite slides I like to show is the life cycle of a typical mining project from discovery to first production. The average across the board is 16 years or something like that. Robert Friedland said he thinks for a tier 1 mine it's more like 20 years. The problem is that we have an inelastic supply response to a demand response which is already underway and growing. And when inelastic supply meets demand growth, we all know what happens.
You said something before on the supply side around the market not paying a lot of attention to some of the disruptions. And that's quite counterintuitive. People like me love to talk about bad news and all the problems that are happening. People love talking about strikes in Latin America and copper supply, etc. Why aren't people paying attention in your view?
I don't know. Well, that's not. I think they are. I mean, analysts are putting it in their models and saying, "Oh gosh, we've now gone from if you read the commodity analysis coming out of Colin Hamilton out of BMO and Jeff Curry out of Goldman Sachs, they're putting it in their models and saying, okay, we've now gone from a small surplus to a deficit, and so we therefore expect it to be incredibly strong this year." But like all things, it's out of our control. There are speculators. Copper is a traded market. There is the ability to speculate, which can have impacts on the overarching. And then there is, of course, the views on what's going on in China that potentially dampens it a little. So in the long term, I think it will play out. Whether it'll be a straight line, it's clearly not going to be a straight line. There'll be ups and downs, but I grow more certain the more time I spend looking at this market that there will be a move in copper and it will be relatively sharp to the upside.
How much of your view is based on the need for copper in relation to fossil fuels, as in fossil fuels have to get phased out for copper to get more widely phased in as a replacement?
So, and again, going back to the realisation from governments and Australia in particular that the overnight phasing out of fossil fuels is impossible. It's absolutely impossible to do and to maintain what we enjoy as a society. So I think that transition is going to take longer. It has to, because you can't just overnight reverse 100 years of what we've been doing, the status quo, in order to try something new. Otherwise there will be teething issues, and we've seen power outages in places like Australia. So I think that will be extended. Copper is more of a delivery method for the renewable energy that is going to come, and the transition away from burning fossil fuels for mobility and all of those sorts of things. As we get more strain on the system, we need to invest further in that transmission infrastructure. And I think, as I said earlier, the policies have changed from the government. It's clearly happening. Whether it takes 5 years or 10 years or 15 years is irrelevant, really. The story is there, and that investment is going to occur, and it's already occurring.
When you look at some of the, again, on the supply side, when you're looking at Panama, for example, some of the issues around these big projects that you've already talked about that can't get permitted, we seem to have this juxtaposition between this desperate need, or the rhetoric around this desperate need for a transition and to be greener, but we've got a massive conflict with humanity's appetite for accepting extractive industry and actually permitting these things. Are we at a tipping point now where the public is starting to realise that you can't have this green future without metals, or do you feel like we're still 5-10 years away from that realisation?
Yeah, unfortunately not yet. And it's one of the great ironies that a lot of people really want this change to occur, but really dislike mining. And my position is no different. A lot of people don't understand what I do, and think that mining is a dirty word. And historically, it hasn't covered itself with glory, arguably. I think that's changing. But the reality is, in order to achieve anything of what we're talking about, mining has to be a core part of it. And I think Mark Cunnifani, who I have a lot of respect for, has made the comment several times that the mining industry has not done a good job of explaining just how fundamental mining is to that transition and to life as we know it. But I think we're getting better at it.
Okay. In terms of future supply, where it's actually going to come from, Marimaca, obviously, that is a project that you're very confident will be delivered and be part of that supply mix. You've talked about the investment that's needed for some of the existing operations to carry on, near mine reserves to be converted, all that great stuff. In reality, it's nowhere near enough based on the forecasts. Where do you see future supply coming from, and really, can you see world-class deposits being developed? What needs to happen to actually get close to meeting demand?
So we need more exploration, obviously, but exploration is a naturally incredibly risky game. There has been an announcement that Cobalt Industries, which is backed by Breakthrough Ventures, made an amazing new discovery. I haven't seen the details of it, but it sounds very exciting. Traditionally in discovery, under the head frame is the terminology. Next door to a mine is the best place to look for more metals. But I think we have to spend more risk capital on exploring, and I think that's starting to happen, although there's been underinvestment in the last little while. There are plenty of development stage projects which are borderline economic. And going back to my point that I made earlier, the incentive price to get those into production is different to just keep them running. So I think in order to get some of those projects that are just on the cusp green lighted by the big companies, we need to see a movement in price, and we will be able to see a supply response, as occurred in lithium. Lithium price went crazy, lots of new production came online. The demand story for lithium hasn't changed. What's changed in the short term is the supply story, and maybe a little bit of softening in demand on the EV and battery side. But in the long term, that's only going to be good for the transition that's going to occur over the next 5 to 10 years, I think.
I think what would give some investors the shakes about being compared to lithium is obviously the fact that we're kind of looking at this, the understanding of the need for lithium, or the importance of lithium, probably just over a decade ago on a run-in price, and then the idea that there's too much supply out there, and then it went down again, and then it ran again, and then it went down again, and then it ran again, and then we are where we are today, where it's kind of halved again over a short period of time. Copper's a much bigger market, but what's protecting copper from essentially a bubble?
a much broader base of demand, much broader base of use. And that's going back to what I was saying earlier. The best thing for removing volatility is to broaden the base of demand, and that's what's happening in copper. So you've got your traditional uses, all of the electronics, all of the, Colin Hamilton talks a lot about air conditioners being a signal for the property market in China. As you finish houses, air conditioners go in, a lot of copper in those sorts of things. There's a much broader base of demand in the copper industry than there is in lithium, which has traditionally been a very small market and has grown enormously and is highly dependent on the health of the battery market, and particularly battery electric vehicles. So I think they are very different, but the overarching thesis is the same. You meet exponential demand growth with inelastic supply, as we did in lithium, and the amount of growth in lithium price was astronomical. I mean, it was incredible. Hopefully it's not that sharp in copper. We want it to be sustainable, but I expect there's going to be a really sharp move.
Okay, and we're running towards the back of time here, but I did want to ask you specifically on the theme of demand and this undercurrent or this continuous foundation of demand versus these acute incidents, whether it's urbanization in China, energy transition, which obviously is going to provide a spike, and then hopefully for groups like Marimaca and other people leveraged to copper, it's going to be then a maintained level of demand at much higher levels. We're hearing more about urbanization in India now. How significant is that going to be? Is that a little pimple on the bum of China and the energy transition, or is that something significant?
Well, no, the forecast for India is it's going to be, it may even be the largest, in the next decade, the largest population on Earth. And what we know is as populations grow, the amount of demand increases significantly. India has, during my career, been the long-awaited hope. But the fundamental difference between India and China is organisation. And you can argue whatever you like. We're not going to get into China's human rights record, but what the Chinese centralised decision-making process delivered was absolutely remarkable if you look at human history. India is very different to that. It's very much more disorganised, but yes, it is becoming a much more significant driver of demand for steel, for copper, for all of those commodities, coal, unfortunately or fortunately, depending on who you're invested in. So I think they become more important, but I don't think we can certainly don't see India being another China just because that centralised command is missing from that jurisdiction.
Okay, just to try and pull a bit of this together, Hayden. So what I'm getting from most of this is essentially the near term remains fairly volatile. There are downside risks with recession and general economic health, particularly out of the US, but also some doubts over China, although infrastructure spending is strong. But we are seeing indisputable demand events coming up through the energy transition, general economic health, and then India as well. Do you have a view on how you see copper demand and the price relationship progressing over, say, a year and then a 5-year horizon and then 10? And can we actually use some numbers?
Yeah, so I think the second half of this year is going to be all important, and it will be dependent on certainly what the Fed does in the US with respect to interest rates and what signal that sends and the impact that has on the US dollar. Based on what I'm seeing, I think that most people believe that there's going to be interest rate cuts occurring from the middle of the year, which means the second half of this year is going to be a really interesting time to be in copper. And I would not be surprised if we went through $4 and made all-time highs. So that's what I'm saying to my board is the second half of this year is going to be a really interesting time to be in copper. There is always the risk of short-term volatility. We don't know what's going to go on, but what the data suggests to me is the worst of the economic issues are behind us. Inflation is more under control than it's been. The desire for governments to further pad out a soft landing will be to cut interest rates when they can, and that's going to be significantly positive, not just for copper, but for the whole suite of commodities that we look at. And in the longer term, once that momentum starts, well, I'd hesitate to say how much it could spike, but in order to incentivise a supply response, as I said, I think it's got to go north of $5.
Goldman Sachs has said $14,000. I think they gave a time horizon on that, and that prediction was made a couple of years back. Now, what kind of time horizons are you looking at for that $5 mark?
I'd say within the next 2 to 3 years. It could be sooner than that, but I think I'm hopeful it'll be a long and a nice steady progression up to those sorts of levels. As I said, the negativity of sudden spikes, I think, and volatility impacts investment in the industry. Which boards can make a decision when the prices are going up and down and all over the place. But I'd say over the next 2 to 3 years. But certainly I see us going through $4 during the course of this year and maybe making all-time highs during the course of this year, towards the back end of this year.
Hayden Locke, thanks very much for your time.
Thanks.